Hello, investors and traders. Welcome back to another episode. So, it's been a while since my last video about trading, investing, or anything related to the stock market. I think it is time to make another video because we are already halfway through 2021. I want to share you guys some of my performance to show you guys what expect from me as a trader and an investor, what is realistic expectation and what is unrealistic expectation. On top of that, to answer some YouTubers' comments, first of all, thank you for subscribing to my channel. I can't believe we already go this much subscribers in this short period of time because when I made this YouTube channel, my intention was to post my day trading recap videos, share some of you guys out there what type of trader I am, and later on I can go back and look at my trading video and see and critique myself, like why did I enter there, why did I exit there, because this is an endless learning game in the stock market. Okay, so let's just get started. So I took a break from trading for almost a month and a half. Since so my trading account has been going kind of sideways. It's not moving right. Yesterday I went to my friend's house in Orange County, which lived like an hour away from my house because I live in the Inland Empire. So I traded PRU yesterday at his house live. He was trading right next to me, and he also doing his own thing. I'm doing my own thing, but at least he knows he have an idea of the type of trader I am and stuff like that. So yesterday I made a small little gain, 500 something in a month and a half without trading, which that's pretty cool. So actually I the one to look at his screen, right? He has a whole bunch of screens. He watched a whole bunch of stocks, and I saw on the screen, oh, PDU is falling. Remember, each of these candles represents 5 minutes. So it's been 15 minutes since this thing keep on falling. So oh, okay, this looks pretty cool. I like the setup, right? Falling, a pin bar shows up, and then I enter on this pin bar right here, around the $1/2, 1,000 shares. Where my sell target, of course, it's selling to resistance right there. I sold near 103, to be exact, 102.98 as I remember. So 1,000 shares, do that. You have around 500, $600 profit, right? Around 50 cents, 60 cents move. That's it. That's my trade for the day of yesterday at his house. And then the stock just gone down after that, I guess. So that's yesterday. Now today. So again, PDU in the morning, it popped up here. Now I don't like to chase when the stock pop. That's just not my strategy, not my type. So I wait for the pullback, and it did. It pulled back to right here. So I saw this pin bar shows up, and that's where I entered. You can see the entry right here, right? Buy 2,000 shares, half size, not full size, half size, market order. I thought at that time it will go up at least 103-ish, because it did went up all the way up to 103 and a half, right? But unfortunately that didn't happen. It tanked. But then it holds right here. It holds right here. But then notice here, I enter here, it tanked down to here. That's like what, 40 cents, 30 cents. It's too close to my entry. That's why I do not want to buy more. I was waiting for it down here. You see the pre-market, right? So it could go down to here, but that didn't happen. So it bounced. But then I saw this happen, this pin bar right here. It's a reverse pin bar. That tells me, okay, seller is stepping in. It's not going to probably go up higher, and that's why I decided to get out. And I did. I got out on this candle right here. You can see the sell price. Barely break even. As long as I break even, I'm happy. Now, after that, I don't trade anymore. I don't see any good setup. Now, that's a key lesson right there. If you don't see any good setups, don't force a trade. It's okay to not reach your daily goal, right? Because remember, when I day trade, I like to make at least $1,000 a day. But that didn't happen. It didn't happen yesterday or happen today. So what I'm gonna do? I'm gonna walk away or just let it be. I'm not gonna force it or over trade, because that's a bad thing to do when you're a new trader. Is over trade. That's a bad habit. You only need 1 or 2 trades a day. You don't need more than that. The more, I don't know. That's not me. I'm just giving you guys that my opinion. Okay, so let's go to this YouTuber comment about a month ago. Sorry, bro, it's been a month. I sent. Now I'm answering your questions. So he pretty much asked me what got me into trading and what books or YouTube videos that I watch. To be honest with you guys, for me to get into trading is I had to go through a life experience called being broke. And in my entire life, I was broke. I didn't have wealth or learn anything about wealth or know anything about wealth, because YouTuber didn't really take off until I was in my mid 20s. This is like around 2010, right? Because YouTuber is still relatively new. It's only been around like 10, 15 years. I'm 35 right now, so mid 30s. So I got to a point in my life where I am tired of being poor and I'm tired of being broke. My bank account from 18 to 25, 26 is around 1,000 or 2,000 or less in that whole entire 10 years of my lifetime I did in that period. You know what? Like, I'm tired of being broke. So I decided to educate myself about personal finance and how to build wealth. The stock market was one of the tools that how to build wealth. I look at all the richest people in the world, like the top 1,000 people of the richest, the billionaires. What did they all have in common? Stocks. They have some business here, real estate there, but overall, it's the stock market that make them very, very, very wealthy. Look at Elon Musk. Do you guys know that he made over $100 billion in 2020? Look at Tesla stock. It's all about the stock market. That's where the true wealth is. So that's why I decided to join the stock market. And of course, I have to start from scratch. So this was one of the first guy that I look at. Remember, I got involved around 2013, 2012 in the stock market. This learning, not in the market, but just learning phase. And a lot back then, YouTuber is not like it is like today. Today, a bunch of YouTubers just promoting themselves. Join my Discord, join my courses, join Weibo for free two stock, join Robinhood for all that bullshit. I don't like any of that stuff because that's not authentic. If you making real money in the stock market, how I see it is you should give back to the community or share your knowledge. You know, how I see it. So this video here was one of the very first videos that I watched about investing. The next one was here about Tyrone Jackson. Now notice this video was published 2001, 11, so more than 10 years ago. So this was the first video that I watched. And I'm like, whoa, you can make money just like that. Buy at $39, sell at $4 with 1,000 shares, make $1,000. You know, that's how I first got my program myself to um, expose to the stock market. I did not buy any books, unfortunately, or read any books about trading. In fact, yesterday at my friend's house was the very first time I held a book about trading. It's kind of funny. Now, bro, you watch this video, you know who you are, because I was at your house yesterday. So he had a trading book. It's like an inch thick. I'm like, oh crap, I know the author. And I look at it, I just glance through it, like, hey, this stuff is on YouTube, on Google, man. Just type down how to trade. You know, like here. Look at that. Boom. All this video about candlestick formation. Learn it. What what bother me is or baffle me is that when someone buy a course, right, how to trade stock, guess what they're gonna do? They're gonna tell you the same crap how to read these candlestick formation. It's the same thing. I don't understand, like, when you buy like $1,000 or $2,000 course from any of these YouTubers, and then somehow down the road you expect to make money. No, it does not work like that. You have to put in the work. You have to go through the process. That process is the learning process. It's more valuable, more, I don't know how to describe it, than the results. The results will speak for itself over time, right? You need time. Malcolm Gladwell did say to master your craft, you need to put in at least 10,000 hours. That's 5 years experience. It's not overnight, you know. I don't get the level I have right now in terms of investing is not overnight. I've been doing more than 5 years now, obviously, right? You can see the performance here on this account. This is my main account from TD Ameritrade back in 2017. Now it's 2021. So I've been 4 years in the market with solid history. This is my performance. This pullback right here, all market pullback, is not my performance, right? But hey, it is what it is. Right here, same thing. The March sell off, May sell off, right? But it still speaks for itself. So right now I'm at 272%, but I start out a year, you can see it right here, 247%. I'm talking about since the beginning of this account, okay? So there's roughly around 30% return so far in 2021 for this account. These are my current holding, and I'm in 50% in cash. So 23%. Now, if I put, let's say I put all, what this mean right here is QDEL is my biggest position so far, 23%, but I have 50% in cash. So I'll give you an example. So this account's $1 million, right? So 500,000 in cash, 500,000 in stock. That means I have over around $100,000 in this stock. If that makes any sense. For those that are good at math, you know exactly what I mean. For you who are not good at math, I'm sorry. Okay, that's now this is one of my account performance. Now these are my transaction since the beginning. So like no, not that much transaction. It's like a little bit, 300 something transaction since the beginning. Let's see, of April 17. So these are all the transactions that I have. So you can see in the month of July, it's only like 10 or 15 transaction. I recently purchased PRU, and AbbVie. So let's go to the chart. So this right here. So I already have it. Yes, I day trade and I swing trade in the same stock. You know. So PRU, fundamentally, this stock is undervalued. That's why I decided to build a position for swing trading. Day trading a little bit story. You know, day trading you gotta look at the technical. Okay, so I bought it here. Uh, if it takes, I hope for it go lower, at least down to here, or even down to these levels. Then I'll buy some more. AbbVie, I bought a 112 right here. I see the stochastic start pulling back, so I'll build a position right here. I would be love to buy some more down here if it's possible. Maybe it will. I don't know. Then sell somewhere up here or even higher. Cause I believe that fundamentally, AbbVie is still undervalued. This should be at least over 120, $130 stock by now, fundamentally, in terms of the DCF evaluation. So again, I begin to build a position at 1112. Now let's go back to here. Amazon. I recently sold at I sold 2 times around the 3,500 and 3,400. So let's go to Amazon. So these are some examples of the swing trade positions. So I sold some up here and I sold some down here. The reason why I started selling it is because the stochastic is slowly sloping down. That means it's kind of in the big picture, Amazon is still undervalued at 3,400. Amazon should be at least $4,000 or at least 3,700 or 3,800 by now. But unfortunately, it's still consolidating for the past year now. So you can see the big ass rectangle over here. It's been going sideways. So we are the top of the channel. So I would like to sell some. I like to sell it and then buy some more down here if it's possible. But we don't know. Maybe it'll break out and go to 3,700, even 4,000. I don't know. But as for now, I'm still watching it. I saw stochastic stuff pulling back, so I decided to sell some, take some profit. I entered around down here, around the 3,200s. So that was a pretty nice gain right there for Amazon. And here's my other account I want to share with you guys. Let's go to here. So this is a small account. Start out in September around 1,000-ish. Right now it's at 23. You can see it right here, 23K at all-time high. And here is let's go to year to date. Talk about a little bit the psychology behind it. Remember then there's time the March sell-off. My account, it took a hit. It went from 15 down to 11. It was 11, 12, right? Yeah. So that was a pretty big hit, but it recovered. Stick to your plan, stick to your goals, and it will recover. Now let's go to the close position. The close position in terms of performance. You can see I already locked in 7,000 profits. So pretty easy, right? It's swing trade or small little swing trade here and there. You can see, right? Pretty consistent. I focus on consistency, like I said in many of my videos. So you do take out the calculator. So I already locked in 7,100, right, in profits. Let's get to the exact number, for instance. Divide. What's the account size right now? 22.9. Let's just go here. This should be around 30%, I think. 31%. 31% so far since I opened this account. Now, if you go here to my main account, you can see it's the same, kind of similar performance. For the past 4 or 5 years, ever since I got started in the stock market, my average return is around 40%, 50%, 60%. That's the average, right? You can see. So now, if someone asks me, hey, can you get 200%, 300% return in a couple of months or in a month? I would say no, I can't do it. Why? That requires too much risk. I am not that type of trader or investor. To get that kind of return, you need to trade something like this, MRIN, penny stocks, to get those 200-300%. Now, you may get 200-300% in one trade. Can you do that 100 times, 1,000 times, 5,000 times? How about the number of trades? The answer is most likely no. It's not going to happen. Or else you will become a multi-billionaire by now, right? So it's not realistic. These type of trade right here are very, very hard to trade and require a lot of skills. Not a lot of people can do these kind of trades. This is known as a short squeeze, right? Very benefit for long, but sad for shorts. Eventually, this will clap back down to reality. We don't know how high it will go. It can go even higher. You can see that right now the market's still open. That's why the price is still fluctuating. So let's go to the 5 minute. Let's go to the chart. Sorry. Right now it's bouncing. Support right here at 12 or 14 right here, right? Support, resistance, breakout. Now back to support. Common sense, right? Tomorrow, I don't know what the hell you're gonna do. Maybe it'll break above this previous high and go to even higher, up to the 20s and 30s and even 40s and 50s. I don't know. Or it could go back down, right? Next support is right here, around the 12s. After a breakdown of 14, next support is down here in the 8s and 10s, right? Or 9s, so on and so on. It's just another word. It requires a lot of skills to get 1,000, or sorry, 100, 300% return consistently. I think it's very rare to find that type of trader. If they are, I don't know. I don't know if they telling the truth or not based on the performance. But for me, I can't do it. But for me, you ask me, hey, can you get a 30-40% return? Yeah, I could do it. Here's my history. Here's my performance. You can see it. Realistic expectation versus unrealistic expectation. Okay, so I think I made a pretty good video about what I need to post. Recently, I took a long, not long, but I took a vacation to Yosemite. You can see the picture of the new video that I post, right? I went to Yosemite for a week, so that was pretty cool. Right now, I've been watching video like catching crabs and stuff, kayaking. Cause those don't know, I'm already retired, so I'm just enjoying my summer. So I'm like shopping around for like crab nets and stuff. Cause I know crab season is still another month for Southern California. So it's kind of funny, right? From trading to looking at crab catching and kayaking. So yeah, that's what I've been doing. Oh, here, right here. It's kind of funny. Um, on the day of Yosemite, right, the market tanked. Let's go back to a little bit of history. I thought that was kind of cool. Let's go to the DJI. This is the Dow Jones. So let's go to the daily. On the day I went to Yosemite week, it was right here during the sell off. So for those of you Yosemite, some part you have signal, some part you don't. But the funny part was on the day of my hiking, it was a Thursday because we went back on Friday. So I hiked the Nevada Falls. Very nice hike. Took me like 3 hours to get to the damn top and an hour and a half to get back down because maybe I'm out of shape or something. But anyways, I got to this level right here at the Yosemite. I call it Emerald Pool or whatever. Pretty cool scene. And I got signal. I'm like, oh crap, the market's still open for another 10 minutes. So I log on my phone. I was using my phone, and I saw the market. So I looked through the stock that I have, and not so bad performance. And I saw THO. So let's go THO. So I bought some THO at 117. That's my initial entry. Then when I add Yosemite, it was down here. I'm like, oh my goodness, I was so happy. Now it's kind of weird, right? When you see the stock goes down, you get happy. Hey, that's just me. I am very excited when the good companies goes down. So I like being to load up right here, but I did not load up that much. That's my regret. Now it's at 112. Kind of sucks, but it is what it is. I thought it was kind of funny. I made this trade during Yosemite at the waterfall, so that would be pretty cool. One more before I sign out is I want to share you guys this video. Um, just to think opposite than other people. A lot of people get excited when the market can keep going up and up and up. For me, I get very scared when the market keep going up. I get excited when the market goes down, and I'll tell you why. Man, this is one of the best day ever. Look at that, negative 1,500 points down. Everything is massively down. Man, this is great. I love it. Come on, keep going down. This is the QQQ. Like, it's just, man, we need this major pullback. I've been waiting for this day. Finally came. Oh, I'm at school, by the way. Just studying. Just the kind of stock. So the point I'm trying to say here is, for investing, trading, or swing trading, you like best on days that pull back. You get fearful on days like this where I keep going up and up. All of my account right now are literally all-time high. You can see it, right? That scares me because you look into the fundamentals. we are not in the greatest shape in the economy. You know, unemployment is still very high. Businesses is barely reopened. The economy is barely reopened. Coronavirus is spiking right now, right? And yet the market is all-time high. That scares me. And on top of that, we do not have a pullback or a correction. I'm talking about the real correction, not because this is the correction right here. I'm talking about the overall market, the Dow Jones, the SPY, everything. There's not hardly any correction, and that scares me because we are kind of like overdue. Sorry, wrong ticker symbol. Here's the SPY. See, these right here, this is a correction. This is a correction. I'm talking about like these kind of correction, or at least this correction where 15%, 20% correction. We haven't had that since the election. That's scary because this is not sustainable. Eventually, it has to pull back. You can see the stochastic is very high. RSI is getting high, right? It's in the almost in the 70s now. So when that day comes, do not be afraid to buy good stocks on good prices. You want to buy good companies on discount. Yesterday, one of my friends asked me, "Hey, is it time to buy McDonald's?" She saw McDonald's in the 230s. I'm like, "No, it's not time to buy McDonald's. It's way too high right now. McDonald's way overvalued. You should buy McDonald's down here or down here, not like not all time high. I'm not a fan of buying stocks and hold it for long term at all time high. I like to buy when it needs pullback. So my final message is right now I would say build a cash position, wait for the pullback. It may happen near the fall or the end of 2021. I know the pullback gonna happen anytime soon. It's just a matter of when. Right now the market is all time high. Do not get greedy when others are buying. Sorry, yeah. The famous quote from Warren Buffett, right? Be greedy when others are fearful. Be fearful when others are greedy. Right now there's a lot of greed in the market. A lot of greed. That's why the stock keep going up. And you wanted to, if you do buy, I recommend buy small shares. Just like THO, where I bought 117 right here. I only buy like small percent, maybe 1 or 2% on my portfolio. It's not much. Down here, I bought more, right? Obviously, because tanking. You see, I don't buy it when stock go up like this. Can you imagine? I'd say as like one of those retail investors. Oh, THO is going back up to 150. I'm gonna buy one somewhere right here, right? Heavy, or buy all in or whatever. That's all kind of YOLO people out there. And then this shit happen, right? You're gonna freak out when this happened because it went from 150 all down to almost 100. That's putting his wipe out like 50%. For those who don't know, if you're down 50%, you need 100% in order to break even. No, yeah, close to 100%, right? Because you don't lose 50% and thinking, oh, maybe go back to here, I'll break even. No, it requires a lot more for it to go back up for you to break even. The deeper you down the hole, the more percentage it takes for you to get back up or to break even. So I'll leave it to you guys to that. Okay, this video has been pretty long. I'll catch you guys on the next video. Good luck in your investing. Bye.